Pankaj Pandey then joins in on the show to talk about what he's making of the market construct and, of course, what the day ahead is likely to be like. Pankaj, hi, good morning. What's the market expecting from the RBI policy? A status quo and, I guess, a revision in the inflation target upwards?
Yeah, hi, good morning. Thanks for having me. Yes, I think rate hike expectations are not there, so we don't expect RBI to sort of do a rate hike. But I think inflation has been sort of inching upwards and slightly above what RBI would have been anticipating. We have already seen crude rallying to about $87. And then you have pulses prices and some other agri input prices going up. So obviously, inflation outlook could get revised, and it is possible that the RBI might maintain some bit of a hawkish stance. But I think nothing major changes we would expect overall. I think rate cut, again, expectations have been also sort of pushed beyond because we don't expect the US Fed to sort of cut rates because that will sort of put pressure on the currency. So overall, no major changes expected except for some bit of a hawkish stance. But I think interest rate sensitive segments could witness some volatility today, largely because of that. But our overall market outlook remains intact. So our sense is that earnings will continue to grow at 15, 16% the next 2 years, and which is why we are maintaining a Nifty target of 21,500.
Pankaj, hi, morning. Let's get in an outlook as to what your expectation is from Hero MotoCorp, all set to deliver its numbers later today. Do you think that we are likely to see a margins in check this time around due to the higher input costs? And what is the commentary that you think the street would want to hear?
So I think typically two-wheeler as a space we have not been liking so much. I think overall the bookings for the newly launched Harley Davidson product has been sort of better. But I think two-wheeler overall, we are still sort of getting on and off kind of. So we had seen the Hero MotoCorp delivering 5 lakh additional excess volumes. But in some months or recent month, it has again come down. So even the rural recovery is not so even. So which is why we have not been liking this space for quite some time, except for Eicher, where I think the volume has been largely intact, largely because of the premiumization. So very muted expectation from Hero MotoCorp, and I don't think we are going to sort of change the stock going forward as well.
Right. Pankaj, I'm wondering how you are absorbing the news of Max Financial. The fact that Axis Bank is looking to up stake an infusion of 1,600 crores thereabouts. The market, of course, was talking about it. So a large part of overhang in that sense is behind us. And then there are VNB margins also, which have expanded to about 22.2. Having said that, is this the most preferred in the insurance sector as a play? Or is it continue to be, an SBI Life or an HDFC Life which find favor?
I think most of your insurance companies have sort of done decent price performance, and at this point in time, we are still not chasing most of them. I think it is better to sort of play banking, which again would have pieces of various businesses, be it AMC or be it life insurance. I think on the life insurance, overall, the growth has been sort of coming better, but I think we are.
Oh, we seem to have snapped that line. Just going to reconnect. But in the meantime, let's get some technical chart checks going as well. And Vaishali, coming on the charts of Maruti Suzuki in trade yesterday, declined Hero Moto as well. It's going to be in the spotlight ahead of its quarterly numbers. What's the view on the charts?
Maruti has been consolidating, but I think the long-term chart, what I'm seeing is still in the positive up move. So I would say that 9,300 should act as a support level. And once we see a new round of momentum setting in, we have a projected target of 10,000 to 10,300. So as long as 9,300 levels are held on, my view stays positive. And the other stock that you asked me to look at is Hero Moto. So yesterday we saw that, yes, Hero Moto gained good strength and it has got renewed a new round of momentum. But let's see, we need to see a follow-up up move coming in. So for a new strategy, I would wait for it to cross 3088 levels for further upside trade.
Big buoyancy in the likes of Aditya Birla Fashions as well as Trent in trade yesterday. Trent, of course, came out with the numbers. Once again, a very steady quarter is what they've reported. brokerages have upped their targets even further from the current levels on a trend. And then, yes, Aditya Birla Fashions, which from the word go yesterday was quite the buzzer. On closing, it held out by over 7%, and that stock will just come off for you on your screens. And good 6-month move, or rather 6% move nearabouts, is what Trent also saw in trade yesterday. Naresh, if you had to initiate a fresh long on either ABFRL or a trend, which one would you pick? And would you go long at these levels on any of these names?
So it would be a tough call given that Trent already made a big move yesterday. So the stock went up from 1700, 1720 to 1790 levels. But on a fade off towards 1750, it would be Trent because that's been in a strong trend. It gave a flag breakout yesterday. So at 1750, the risk reward fits in wherein you keep a stop loss below 1700, expect a move towards 1850. ABFRL is been a major underperformer. The stock needs to actually cross above the 230 mark for it to become a trend change. So 230 has been the high for the last almost 5-6 months. And on the lower end, 190 has been the bottom. It came very close to that bottom 2 days back as well, post the numbers. So ABFRL would be about 230 on the radar. But for now, Trend seems to be the strongest one. And it has continued in an uptrend all through the last few months and years also.
Okay, that's the take coming in on ABFRL as well as Trent. Quite a few brokerages as well which have come out with their notes. I don't know if we have Pankaj back with us, but Bharat Forge, the numbers, remember, were reported yesterday. Strong execution is what they've seen in the quarter gone by. But I think with Bharat Forge, the story remains of whether or not valuation comfort is there or not. I mean, for instance, CLSA has come out with a note on Bharat Forge and they've actually downgraded the stock to an underperform with the target price of 987. Let's just bring up the stock price for Bharat Forge and show you how it closed in trade yesterday. They're saying that the standalone earnings were significantly above the estimates, revenues as well beat. They did see a recovery in the European subsidiaries as well, but it's the valuation comfort that is amiss when it comes to Bharat Forge. At 963, the current market price, Pankaj, what's your take on Bharat Forge?
I think when we sort of look at the numbers are obviously good, and we are seeing industrial as well as the defense segment has started to contribute. And along with that, the European subsidiary is also sort of doing well and with a stable outlook. When we sort of look at even the tier 2 names, say something like Ramakrishna Forging, I think the outlook, especially in global market, is turning very positive. And because I think the overall demand there is good, and there is Chinese players have been sort of vacating that market. So our sense is that overall forging as a space looks attractive to us. Valuations are definitely rich, but I think we are yet to sort of figure out in terms of what target prices will give. But we are positive on this stock overall, given the fact that globally things are turning positive. At least that is what the commentary we are picking up.
A solid move on the stock as well yesterday, jumped up about 6.5%, and the futures, it scaled up also a 6.7% move. Naresh, do you see more gains on the stock, or do you think it's going to hit some sort of resistance here, Bharat Forge?
So the stock saw move post the numbers yesterday. We saw a guidance increase also happening during the market hours that saw another tick up by end of the day. Technically, the problem is we've seen good volumes yesterday. The risk reward is not great. But if there is a fade off back to that 930 mark, which was the breakout yesterday, that would be an entry point. Technically, volumes were good, price action, but result reactions tend to see some fade off over the next 2 days. So would wait for a dip here, but the breakout is clear. It's broken above the 900, 930 mark, which was the high in November 2022 to February 2023. It had made 4 to 5 attempts around the 900 mark. So technically a clear breakout. Would like to buy closer to 930, stop loss at 900, and should go towards 1050 levels in the short term. That would be the technical view.
Meantime, we're also going to keep an eye out on Zee Entertainment. Just wanted to get in your thoughts then, Pankaj, as to what you believe could potentially emerge today, as we will be seeing the NCLT decision, and how critical it is for Zee.
So I think that is the probably only trigger which can help the stock, because when you sort of look at numbers, it's a washout quarter for them. Ad revenues have been declining. And I think going forward, market share recovery in segments like, say, Marathi or Tamil or even the Hindi flagship channel, I think will hold the key. So the only trigger which is there is the judgment today, and that I think will have a key role to play. Otherwise, from a number perspective, the numbers are not really inspiring, and even though the valuations look attractive, there is outlook for better ad spend by most of the end user industries. It's very difficult to sort of build confidence in this stock at current levels.
Z242. It's been a yes, no, I don't know kind of a start for Z. My limited point is, without getting into news what it means, I have one simple point which I want to bring on the table for discussion here, and that's coming your way, Naresh. 95% of the Z stock is in free float, and typically when you have 95% of a stock which is in free float, the volatility has been very high. Now that applies for Zomato, that applies for Z. In fact, Zomato still has some lock-in investors, but in case of Z, there are no lock-in investors now.
Absolutely the case, but if you look at it, the institutional holding is really high. So there is a lot of institutional interest. So that is where it becomes different. It is not something which is owned by retail. The public ownership is closer to 20%. So there are a lot of institutional investors which keep going in and out. But technically, the stock has been in this period of speculative moves. Every time there is say NCLT case order, there is some other order, some announcement going on. So in this case, one needs to wait it out, because that whole cycle which was there of re-rating, which happened in 2021, it went from 180, 200, almost 350. Post that, it has been a downtrend. So technically, in the short term, yes, we've made that bottom at 170 to 190. The reversal is in play about 220 levels, but the risk reward is a difficult one here. But if somebody wants to bet on it, one will have to keep a dipper stop loss at 225 levels. And then eventually the target price comes to around 280. So the risk reward does not come up great at 240. You're risking $15 to make 30, 40 rupees on a stock which is very highly volatile. It's a tough one, but at 220, 25, the reversal is done. So we are slowly and steadily setting up for a move towards 280. And also, if you look at the whole media space, it has started recovering. Sun TV is back to 530, 550. We are seeing action even in the smaller names. So Z could be a stock which could slowly go towards 280.
Z could go to 280. Let's say it's a big day for Z in terms of the news flow. Pankaj, import restrictions on laptops and tablets, which means that if you're planning to buy a laptop, buy it before October. And if you haven't bought it right now, please go today. That is what the message from the government is. But markets are also considering this as an opportunity, because the stock price of Keynes, Dixon, Amber, everything has gone up. Is there merit in buying some of the EMS stocks, electronic manufacturing stocks? If yes, which one? If no, why not?
So Nikunj, we don't have a coverage on most of the companies, so which is why I would not be able to sort of comment. But I think this is one interesting development which would have good implications, because I think electronic was considered to be a big category. In fact, the import overall was expected to sort of go beyond even oil. So if you are looking to sort of localize a lot of these products, these players will offer a good opportunity. Now, Dixon has been sort of volatile in terms of their margin trajectory. Earlier expectation was 6%. Now you're sort of clocking 4%. So margin is where we really do not have much of a comfort whether what kind of pricing they can take and what they can pass, and which is where it is still sort of not a very confident segment according to us to sort of look at.
What do you like within the consumption space, Pankaj? I mean, Bata, bad set of numbers. Trend, great set of numbers. Sula, numbers are decent. What is that category which you're excited about when it comes to the niche consumption space?
So Nikunj, I think largely most of the FMCG names I think are sort of not really looking to, or we would not sort of chase, except for say Tata Consumer, which is valued at some closer to 40 times. I think what we are sort of liking, or structurally have been liking, Trend or Titan. So Trend, for example, delivered 50% plus growth. The last 4 years, they've delivered 35% growth. Industry is growing at 12%. And the Zudio format, they probably have opened around 130 stores this year. Next year, it is going to be even more higher. So I think this is one company which has been sort of, despite the fact that it's quite expensive from a valuation perspective, continues to deliver. And same is the case with Titan. I mean, they've got a market share of 6-7% in a 4.5 lakh crore jewelry market. And with a guidance of, say, 20% growth going forward, that is another expensive stock on the consumption side, and which is why I feel that both these Tata Group companies look very attractive, despite the fact that the valuations are rich.
Okay, fair enough. In the meantime, let's also get in a take as to what the outlook is when it comes to an IRCTC and just some of these other railway stocks, Pankaj. Given that we did start off the year with that runaway rally, do you think that now, just maybe even going by the kind of numbers that the company has reported and the space as a whole, that momentum is fizzing out?
Sort of look at from a top-down perspective, railway, if you look at allocation-wise, used to be some 50,000 odd crore from a budget perspective. That has jumped 5 times in last 5 years to about 2.5 lakh crores. So we have been sort of playing that through some bit of overall bearing as a space, and also from a capital goods perspective, the tier one names. So we don't have, or we are not really actively chasing PSU railway stocks from a fundamental perspective as of now. But that's a very interesting space looking going forward with the kind of spending, especially done by the government.
Some breakout shares then on the charts and get in Vaishali's view. JSW Energy, how are you looking at this one as well as an Aditya Birla fashion?
So I would say, yes, JSW Energy has always been a favorite in this category because it has, you're talking about JSW Energy, yes. So yesterday we saw there is a very good rise in volume, good bullish candle formation. So I would wait for a confirmation for a further up move. About 320 would be a breakout level. And from here on, I would look at a target of 350 to 360. So JSW Energy is a buy at these levels with a stop loss of 290. As far as Aditya Birla Fashion is concerned, well, the stock is showing signs of bottoming out, but we need to wait for a follow-up buy, and it has to move past 230, as Nuresh had just mentioned, because technically it is still in the oversold zone, but we need for further confirmation for the trend to pick up.
Okay. Pankaj, why are utilities making a comeback? I mean, these are businesses where have ESG concerns. These are businesses where you know that ultimately there would be an election cycle which is at play. There are state elections followed by central elections. But the stocks are going up as if there is no tomorrow. What has changed in last 1 year which warrant this kind of a uptick?
Nikunj, sorry, I missed the sector which you're talking about.
Power sector, especially utilities, power generators.
I think, Nikunj, I think that's a very interesting sector to sort of look at from a 5 to 7 year perspective. I mean, you're talking about, or we have an aspiration of 5 million tons of hydrogen. Now, for every million ton, you require about 25,000 megawatt kind of a power capacity. And you're also sort of talking of exporting power to some of the neighboring countries through undersea cable. So I think this is one space which is clearly looking very attractive, even structurally also. I think companies like, say, NTPC, or even we have been sort of looking at companies like Engineers India are looking attractive. There are a lot more attractive companies coming up. We are definitely exploring this option. But I think this is one space which has been ignored for a quite a period of time. And mind you, power demand would grow at 6-7 odd%. But when you sort of top it up with higher EV penetration and plus the prospect of exporting energy in terms of hydrogen, then I think the overall scenario sort of dramatically improves. So which is why I think this is one space which can sort of significantly outperform the overall market.
I mean, talking about multi-bagger, and each day when I look at the data, I simply get fascinated. Like we talked about the move in escorts. We spoke about the move, what you, let's say, saw even in something like Astral. But the stock which I want to talk today about is actually Tube Investments. 3-year return, 5-year return, Tube Investments. And even the 10-year return in tube investments. Now, this year has not been a great year for tube investments, but the 5-year return and the 10-year return in tube investments, I mean, this is like a blowout number. Look at the surge here, 400% in last 3 years. And talk about a multi-bagger in making. If you stretch it up, tube investments 10 years ago was 130. Wow. 130 rupees. It is at 3,000. Pankaj, you know, this is one of those most obvious names. Murugappa Group of Company, great management, great company, great businesses. And 10 years is not like, when you and me went to school. 10 years is like when you and me have started tracking markets. In 10 years, a Murugappa Group of Company has given you a return which is 25 times. What has changed here?
So, Nikunj, we have missed most of the group companies in the Murugappa group overall, but tube investment has been making right noises, be it launching, say, electric tractor or electric CV. So, I think they're sort of riding that the new EV wave which has been there. And even when you look at some of their group companies like, say, Shanti Gears or even Coromandel, which is also sort of foraying into defense, I think this is one group which is seeing a significant sort of a turnaround in fortunes, largely driven by their entry into newer businesses, and which look very promising. We have not been able to capture some of these stocks movement largely because probably we have missed the bigger picture there, but because valuations are also rich and we had seen stocks sort of rallying, but to our surprise, they continue to sort of do well.